In just 6 hours, Americans lost $14 billion, more than the entire Canadian economy at the time. The stock market collapsed, phone lines stopped working, and communication with Wall Street was completely cut off. It looked like chaos. But this disaster didn't start that day. It started months earlier, with a single decision, made by one man. Most people think the Great Depression was inevitable, a bubble that had to burst. But very few know this. One banker didn't just witness the crash. He helped build the system that made it catastrophic. His name was Charles Mitchell, and at the time, they called him Sunshine Charlie. To understand what happened, you have to go back to the 1920s. America was booming. Factories were growing. Cars were everywhere. Radios filled every home. Cities were rising into the sky. It felt like the future had already arrived. People believed one thing: prosperity was permanent, and that belief made the system fragile. Then came Charles Mitchell, a farmer's son who became the most powerful banker in America. By 1919, he was leading National City Bank, the largest bank in the country. But Mitchell didn't just want to run a bank. He wanted to change the system itself. Before Mitchell, the stock market was for the elite. Less than 1% of Americans owned stocks. But Mitchell had a different vision. Every American should be a capitalist. So he did something radical. He brought Wall Street into everyday life. Stocks were sold directly inside bank branches. Ordinary people weren't just saving money anymore. They were investing in a dream. And it worked. Because Mitchell understood something powerful. People don't buy stocks. They buy hope. Advertisements promised wealth. Stories showed ordinary people becoming rich. Salespeople turned investing into a life-changing opportunity. And then came the real trigger: credit. You didn't need money to invest. You could borrow it, put down 10%, control 100%. At first, it looked like magic. Prices went up. People doubled their money. And suddenly, everyone wanted in. But behind the excitement, the system was breaking. Stock prices were rising faster than the real economy. Debt was growing rapidly. And most of the money in the market wasn't real. It was borrowed. Even the Federal Reserve saw the danger. They warned banks, stop lending for speculation. For a moment, the market started to fall. It looked like the bubble would burst early. And then, March 1929, Charles Mitchell stepped in. He made a public announcement. His bank would provide unlimited liquidity. He would support the market. The message was clear. Everything is under control. And the effect was immediate. The market recovered, and then it went even higher. This was the final phase, the most dangerous moment in any bubble, when people believe it can't collapse. Millions entered the market. Housewives sold jewelry. Workers invested their savings. Even shoe shiners gave stock tips. Everyone felt like a genius. But behind the illusion, the math was brutal. Every dollar in the market was backed by just 10 cents of real money. The system wasn't strong, it was stretched. Then came October 1929. At first, prices fell slowly, then faster, then everything broke. The system collapsed like dominoes. First, falling prices triggered margin calls. Second, people couldn't pay, so they sold. Third, selling crashed prices even further. Fourth, banks began to fail. Panic spread. In one day, 13 million shares were dumped. The system couldn't handle it. And then came Black Tuesday. Behind the numbers, there were real lives. A mechanic lost everything he saved. A teacher lost her family home. Entire families ended up on the streets. Millions lost their jobs. Thousands of banks disappeared. People stood in line just to get bread. This wasn't just a market crash. It was a collapse of trust. And what about Mitchell? He said, I only gave people an opportunity. Some believed him. Others saw something else, a system built on greed. He was eventually forced to resign, disgraced. The man who was once called a savior became a symbol of financial destruction. After the collapse, America changed everything. Banks were separated, markets were regulated, new rules were created. The goal was simple: never let this happen again. But here's the uncomfortable truth. We're seeing the same patterns today. Millions trade stocks from their phones. Margin debt is at record levels. Apps promise easy money. Crypto, meme stocks, leverage, different tools, same psychology. The same dream Mitchell sold almost 100 years ago. Charles Mitchell didn't plan a disaster, but he built a system that made one inevitable. And that's the danger, because today, we might be doing the same thing. History doesn't repeat, but it rhymes. If you want to understand how money, power, and history repeat themselves, subscribe to the channel, because the next crisis may already be forming.